Miro, Wall Street was the big story again this entire week, a lot of volatility because of the coronavirus. Let's focus, if we can, on the travel industry. Tell us about what's going on there.
You know, the travel industry is extraordinarily affected. You know, the estimates are that over $60 billion in global air travel is going to disappear over the next quarter or two. So this is affecting the airlines in a big way, and they're addressing it very differently. United Airlines and JetBlue this week announced reductions in domestic and international travel schedules. So United's cutting back 10% on flights and 20% on international flights. They're both looking at how do they tighten their belt. They're looking at a hiring freeze. United is looking at a freeze on management salary increases. JetBlue's doing the same thing. JetBlue's cutting their schedule back about 5% because these airlines don't know what's going to happen to demand. And one of the things that's happening with demand, especially the very lucrative business traveler, is that companies are just saying no to travel. Ford, which has 200,000 employees, said no travel, use video conferencing. General Motors was a little nicer. They just said no travel to the highly affected countries. In the end, for consumers, the planes are going to be empty. They're going to be on time, so you're going to be able to lay out on a seat and at least enjoy your travel if you are one of the few that are traveling today.
Way to think positive there, Miro. Now, so the Fed, they tried to stabilize the markets by cutting the benchmark interest rate, and that affects mortgages. What can you say to people who own homes and those who are looking to buy homes?
Well, you know, one of the positive side effects is that with the Fed reducing interest rates by half a point, also reduced the mortgage rate to the lowest since November of 2012, so just post-recession. The real value here is that on the refinancing or remodeling, 45 million consumers today that own their home have over $6.2 trillion in value that they can unlock from their homes and refinance at a real low rate to remodel or to refinance their mortgages. The one little interesting tidbit in this whole thing is that because of the rates, mortgage applications have increased 10% in the last week, which is huge, and they're foreseeing that to continue. Banks are needing to hire loan processors. We saw it today in the jobs report, record jobs report, you know, the unemployment rate reduced. So good for consumers, could be interesting for the industry. Again, another wait and see.
So let's go back onto the local level. We'll talk about Measure C. We've talked about it so much, but now it appears to be just short of passing. What does this mean for San Diego and the convention center? This
is the first time that we would have raised taxes, hotel taxes, since 1994. There have been 4 measures that have failed since then. Here's the issue. We have Comic-Con through 2024. Comic-Con was banking on this vote because when the renewal comes in a couple of years, the pressure for them to be in one location is going to be huge. So Los Angeles, Anaheim, and a number of cities we've held them off up to now on the promise that we may expand the convention center. That's an issue. You know, the last thing is that while we wait for the votes to be counted, the Supreme Court a couple of years ago voted that, or said that the state Supreme Court said citizen initiatives need a 50% threshold. That was kind of muddied when a Fresno Superior Court ruled that for a sales tax, which this is, needed 2/3. So our last recourse could be that the city and can go to court and see if we can change the rules.
Miro Kopik from SDSU and Bottom Line Marketing, thank you so much for your insight, as always.
Thanks, Maya.